Hello, YouTube. There's only 2 days left, and currently the S&P is over resistance at 476, and we've actually gone back to green on the year. The market is also back into extreme greed. So, was I wrong about the market dipping this week? And we're going to go through and talk about all of that. We have our notes right here. I thought number 3 would happen, and I could be wrong. We talked about how we have 3 different scenarios: closing over 474, staying stuck in between, or closing under. We're going to give an update to that in a few minutes, but we have to keep in mind that the data is only really started. We had a 10-year auction today at 1 o'clock, but tomorrow we got core CPI and CPI coming out at 8:30 a.m. I'm not sure if the estimate is actually 3.2. That's what we're getting here from investing.com, or if it's actually going to be 3.3 as quoted by CNBC. Whatever it is, let's just make sure we pay attention to it. Why? Yesterday, we talked about the reaction to the Bitcoin ETF, CPI, PPI, and the 10 and 30-year auctions. We've got 2 of those data points so far. We got the 10-year auction, and the US SEC just approved 11 spot Bitcoin ETFs. I want to briefly check in to see exactly what's happening with Bitcoin here, because you might be surprised, but it's a sell the news. So it's not a huge sell the news, but we are lower. So we can see that news came in and we're a little bit down, but not everything's a loser. So we had the trap yesterday, the fake headline, and now today we have the actual headline. So where we came back up to, ironically, on the move leading into the news is actually a perfect rejection off of where we got that fake news yesterday. What does that mean? It looks like it was priced in, but there's a positive catalyst here for crypto bulls. What is it? Ether is pumping. It is currently up by 7.5%. Why? I think people are buying the hype, selling the news on Bitcoin, but there is new hype coming into Ether. Why? Hey, maybe we're going to get a spot ETF for Ether. The one I would be tracking here for a clue would likely be ETHE. This is this grayscale ETF, and this is the Ethereum one. It does trade at a discount to net NAV. NAV just means net asset value. So that's the reason why GBTC dramatically outperformed Bitcoin. And we're seeing that here with ETHE. It's currently up by 14% so far today. Currently trades over the counter. So there's going to be 11 choices to trade Bitcoin starting tomorrow. And here are those tickers. Thank you so much, Elizabeth, for sharing this in Slack. I really appreciate that. And I'm going to ask you for a huge, huge favor. If you could please consider smashing the thumbs up and subscribing to the channel, I would greatly, greatly appreciate that. All right, let's move forward because we still got a few more things to go through. So far in the day, leaders are leading. NVIDIA up, Meta up, Microsoft up, Amazon up, Home Depot up. All right, well, what about the rest of the market? It looks like a lot of stuff is getting left behind. But now that the market is actually green on the year, we pop over here to SPY. We go to a 12-month chart. What do we note? There's our good friend, Mr. Green. And what do we have? Well, let's take a quick little peek here because I think it's really important that we look here. All right. Do we have no, we're off by 10 cents versus last year. So I don't know if I'm wrong yet. Again, the title of the video is just to get you to click. Now that you're here, let's give you some value. So we look at high, lower high, lower high. Technically still a lower high. Last year's high, 477.55. This year, 477.45. It is off by 10 cents. Not very much, but it's no cigar quite yet. If you look at where we are in after hours, if that does feed through, we're likely going to get that higher high. But what we want to pay attention to is not just this pattern. We also want to look here to tech or QQQ. Why? Well, it's still off by about $1 to get to that all-time high. 408.71 was the 2021 high. We are just below that right now. So we can see 408.71. We're below by about, I don't know, it's about 21 cents. Exactly 21 cents. Sorry. So tell me why you're wrong, Justin, and tell me what you're going to do about it. All right, let's go. So we're back into extreme greed. Well, the saying is we don't usually buy extreme greed, but let's see what the quote tells us because we're back to our community post. And I talked a lot about this on the pre-market stream that we did today. So what I talked about is this. I talked about how it is a great time to manage risk. This was 3 weeks ago, and the market's pretty much gone sideways since then. So friendly reminder that we are now in extreme greed, and it would be a great time to manage risk in your account, setting stops, raising stops, or trimming. So that's what we talked about 3 weeks ago. And now what we're talking about is just waiting for, again, now we got a 2-day countdown. So a 2-day countdown, and I put, was I wrong? So you would click on the video. Thank you so much for clicking on it and watching the video. One more time, if you wouldn't mind smashing the thumbs up or subscribing to the channel, I would greatly, greatly appreciate that. All right, we'll get back to these notes here. I'll tell you what I think, and then we'll push forward. But what I really want to pay attention to is that we were looking for 4 data points. We had Bitcoin ETF. That's now approved. It looks like a sell. CPI is out tomorrow. PPI out on Friday. And then the 10 and 30-year auction. So let's take a peek at that 10-year auction. Actually coming in at 4.02. And the reason why I find this interesting is because we were looking to see where a home was going to be found for that $6 trillion that's sitting on the sidelines. Let me remind you of what that means. So weekend video, here we got $6 trillion looking for a home. They're either going to go into stocks, they're going to go into bonds, or they're going to go into money markets. I don't know what's going to happen. I just know there's a lot of money. There's a lot on the line. All right, there we go. And before I tell you what I'm wrong, again, think about what I told you about which one you will regret more. I think that's a really important thing for us to think about today. So we know CPI is coming out tomorrow. I don't know what the reaction is going to be. I wish I could tell you. But if you tune in pre-market tomorrow, I will be live about 45 minutes after this data print does come out, just before the market opens. So you got 11 choices to buy. The market is clearly getting rotation now because we're back to green on the year, but it's not all created equal. Tesla is in the dumpster right now. Oil in the dumpster. A lot of other things are pretty mixed. It's like, okay, well, NVIDIA is strong, AMD, but like, what about the rest of tech? Apple is red on the year. AVGO red on the year. Got to see this leadership reemerge here. And then as we look forward to the CME Fed Watch tool, looking out to March to see what the rate expectations are, we were at 62.7 on the weekend. And after that 10-year auction, we're at 64.5. So what we have to keep in mind here regarding the Fed Watch tool is that this is a distribution of probabilities. It does not mean we're going to 63% chance to get a cut. What a lot of times what will happen is that people are buying this rate cut expectation because you can buy this as a product. Again, it trades. They're buying this as a hedge because they don't want to get caught offside. That's the really big thing here. So ZQH4, you can see there's volume on this thing. That's what people are buying. So they can buy this as a hedge because instead of over managing their position, we talked about it. We're buying insurance. Well, that's what they could be doing. So a distribution of probabilities just means that they want to be ready for if it happens or if it does not happen. But if we look to the 10-year note for today, after the auction, bonds are up. So what should have stocks done? Well, stocks should have gone down. They did not. Okay, well, why not? Well, this number went up. So as the rate cut expectation increases, even if the 10-year note goes up, it looks like stocks are happy. And the dollar's down slightly today, which is also going to give a bit of a lift to stocks. All right, so we're over resistance at 476. You told me about how the rate cut expectation is now a little bit higher than before. You've also told me how you're going to regret one of two things. I am going to personally regret this one more. I buy and it goes lower. So I don't really care if we're higher today. I can always jump on the train next week. I don't really feel like there's any need for me to jump on and get FOMO. Some people might be number 2, though. And if you wouldn't mind dropping me a comment to tell me which one you are, I also did this on our community tab if you want to go answer there. So number 2 would be, I do not buy and it goes higher. Well, some stocks are moving higher, like NVIDIA, right? Like a few others. Well, if you're like, oh my God, these things are moving higher without me. Yeah, well, you got to figure out which one you're going to regret more. I don't get FOMO looking at a chart like this. Why? I've learned to manage my expectations and manage my emotions as it comes to trading. Easier said than done. But for me, I said, if I buy and we go lower, and now on Friday the 12th, I'm like, oh my God, why am I not happy? Well, it's because this is what I'm going to regret more. I do have stocks in my account. I am a little bit net long, but the market's only just gone back to green on the year. What's the need to rush? Because we've been talking about how we have to get above 480. We're closer, but we're not there yet. We're only at 476. We have to rally by roughly another 1%. So now let's wrap up by talking about the weekend note and exactly what the update from yesterday and an update. So we got through 2 out of these data points: Bitcoin ETF, 10-year auction. Now we got CPI out tomorrow. That is the most important data point for me this week. And then I would encourage you to watch tomorrow's video, which I will leave at the end if you want to see the update on all these. If we close over 474, I'm going to say I was wrong. Market's going to go up, and then we're going to reassess going into the weekend. The part that's missing for me is that we've not actually, we did see a gap fill on QQQ. So this is what happened as well. S&P printed that weekly higher high last week. It went first. It did. QQQ followed. It did. And then QQQ, because we're at 408.7, we actually filled the hole here. So on a gap fill, we're now closing just below 408.71, which is our previous all-time high. And as we talked about, this basically looks like a massive cup and now potentially a handle getting formed here. All right, that is it for today. So we got to wait for 2 more days. And if I was wrong, drop me a comment and tell me why. If you think I was right, drop me a comment and tell me why. Otherwise, I will leave you with the video here from yesterday, which gives you more detail on that 3-step recipe. And if not, please click on the right-hand side to subscribe. I will be live at 9:15 Eastern tomorrow. Thank you so much for tuning in. I'll see you tomorrow.